Hello traders, are you a swing trader? Do you trade forex or do you trade any financial instrument? Today, the good news is that I am about to reveal the key to a successful FS swing trading. And I would like to invite you, okay, to put everything aside, okay, to focus and to watch the full length of this tutorial. First thing first, for traders that have been following us for some time, you may already know this, but allow me to speak to other new traders, okay? We follow a specific trading drill when we are about to swing trade, all right? The reason why we need to do that is because the market is highly sophisticated. Professional traders are becoming very, very intelligent and very, very smart. In the old days, it was easier to swing trade in a financial instrument. A lot of old traders were using the stochastic, the RSI, and the normal technical indicators. And they were getting away with all kind of mistakes. But nowadays, the market has become very, very sophisticated. There are market participants that we call the contrarian traders, and when they see a bullish trading setup, they will sell instead because they know their strategy is very simple that most of technical traders are losing. More than 80% of technical traders are losing. So their strategy is this. So when they see a clear-cut bullish technical trading setup, they will sell instead. On the other hand, when they see a clear-cut bearish technical trading setup, they will buy instead. All right. So they are doing completely the opposite of normal traders. There is another group of traders that we call that are using hedging activity in the market. So though they may, for instance, sell one financial instrument, and they will just go and buy another financial instrument. All right. That is okay, positively correlated to the first one to hedge their trading activity. So as they buy this one, they will sell the other one. But what they are doing here, okay, at this by selling the other financial instrument, is not a real trading activity, but it's just what we call a hedging activity. So the second trade that they are taking is to protect the first trade. So this is just to give you a bit of idea how the market is becoming a bit complex to most traders. So in order to achieve consistent winning trade or to start improving FS trading or to avoid forex trading mistake or financial market trading mistakes, one must have, okay, one must follow, okay, the trading drill. All right. The trading drill, I've been talking about this in every video. Why? Because it's so important. We are looking first for a trading setup. So most of traders already know this, that are following us know this. And then we validate the trading setup on another higher time frame. And then we make sure that we implement a multiple time frame trading method. At the same time, we are there to the trading triangle. I will not go into the detail about all these steps. I will just mention them to you very fast, that those are the steps that we follow when we are talking about the trading drill. This allows us to control the risk and also to avoid losing, okay, like a mad traders. Okay. So what is the key to a successful FS swing trading? The first key, the first thing one must follow is the trading drill. But on top of the trading drill, we have a trading setup. So I would like to play a little bit with you, all right, if you allow me. Look at this chart. I'm on the monthly chart of the Euro New Zealand dollar and try to see whether you can recognize, okay, any trading setup that is in place right now. Your time is starting now, and I will give you how many seconds? All right, I'll give you, okay, 8 seconds to deal with this okay, exercise. So keep watching the chart and see whether you can recognize a trading setup. All right. Okay, time's up. Okay. So Probably you have recognized a trading setup because I have some drawing on my chart that will help you to quickly see a trading setup. Maybe you have seen that the stochastic is oversold and you say, well, Joe, this is a trading setup. When a stochastic is oversold, it's pointing to us a support level. That support level for this chart is 15003. Therefore, George, my trading setup is very simple. Stochastic is oversold, price at the support level 15003. I will be giving priority to bullish signal above that level, and I will be giving priority to bearish signal below it. But maybe you have not recognized any trading setup, but there is a specific trading setup right here that we're going to talk about in this tutorial. So the point I'm making here by doing that exercise is to highlight the fact that it's so important to know your trading setup. It is important to have a valid trading setup. Now, if somebody purchases the TSTWS1 S008 trading system, we give them the 24SP trading material. It's a trading material that gives to traders 13 specific stochastic patterns. Those 13 specific stochastic patterns are essential stochastic patterns, but there are other stochastic patterns. We also give to those traders, okay, the NISE trade material, NISE 24 trade material. Those are free material to help traders identify high probability trading setup. But if you are TSTW24 trader, a day trader, you will only receive the NISE 24 trade material. It has nothing to do with a NISE or New York Stock Exchange, but those are just a compilation of trading setup that one can look for, one should learn to master. Okay, so one can even before one can even start, okay, considering trading. So it is essential to know trading setup. It is essential to have a trading setup. It is essential to master high probability trading setup. So when you know those trading setup that the professionals are using, you are looking at a chart like this, you will be able to see and to recognize, to identify those trading setup. So once you see the trading setup, like now I'm on the monthly chart, if I see a trading setup like this on the monthly chart, as a swing trader, it is compulsory that I move to the next step. So find a high probability trading setup, next step, validation of the trading setup. So from the monthly chart, I want to be a little bit curious. I want to see the bigger picture. So I will go to the nearest higher time frame to the monthly chart. It's a quarterly chart at least. I can go even to the yearly chart. If I can see the yearly chart, that's very good. In fact, I will not personally trade any financial instrument if I cannot see the yearly chart, okay? So I will go to a higher time frame to see whether the trading setup that I'm looking at on the monthly chart or on the lower time frame, does it add up? Does it make sense also on a higher time frame? Or am I missing part of the puzzle when I'm stopping only on the lower time frame? So by going to the higher time frame, I'm seeing the bigger picture, and I'm trying to authenticate whether that trading setup is valid or not. That's the next step, the validation of the trading setup, to authenticate or to certify that yes, it is true, it's a valid trading setup. Because if I stop on the monthly chart alone and I don't go on the next higher time frame, I may miss some essential information. The third step is now to implement a top-down trading method. All right, because I'm on the monthly chart, okay, we will combine the monthly chart with the daily chart. So the monthly chart trading setup, daily chart signal, and hourly time frame for the entry. If I see this, if I have my trading setup on the daily chart, trading setup, hourly time frame, signal, and 10-minute time frame entry. If I see this on the 2-hour time frame or 4-hour time frame, those time frame will be my trading setup time frame. The 15-minute time frame will be my entry, my signal, and the 3-minute or 5-minute for my entry. If I see this on the, all right, weekly chart. The weekly chart will be my trading setup, the 4-hour time frame or 2-hour time frame for the signal, and the 15-minute time frame for the entry. I see this on the yearly chart. Yearly chart will be my, if I see a valid trading setup on the yearly chart, The yearly chart will be my trading setup, the monthly chart for my signal, and the daily chart for the entry for position trading. Position traders will look for their trading setup on the yearly chart and the quarterly chart, mainly quarterly chart. All right. So quarterly chart, we see a trading setup as a position trader. That's our trading setup time frame. We'll go to the 3-day time frame. 3-day, all right, 3-day time frame. This is a 3-day time frame for the Euro New Zealand dollar. And we will, from the 3-day time frame, we are looking for a trading signal. And then we'll go to the 2-hour time frame or 4-hour time frame for the entry. So those are just a bit of explanation of a top-down trading method. So find a high probability trading setup for swing trading, validate the trading setup on the next higher time frame, implement a top-down trading method. If the signal fails, you are out. The reason why we need to select a different time frame for the signal and the entry, this allows us to control the risk and to pinpoint the best place to enter the trade. The next thing I will say to you, as a swing trader, never enter a swing trade on Friday. Just forget that, okay? That's my recommendation for the TSTWS or as usual a trader. Do not enter any swing trade and leave it open for the weekend. It's up to you, all right? It's up to you. Maybe you may get away with it, but it's quite risky to do that. That's why I'm saying it, okay? Personally, I believe that Tuesday is the best day for entering a swing trade. The reason is, as the market is closed on Friday, we allow the weekend to go, and Monday we want to see the first reaction of the market before we enter the swing trade on Tuesday. It's up to you. I'm not saying that you cannot enter a swing trade on Monday. All I'm saying that it's better, in my view, to enter a swing trade on Tuesday. We also pay attention as a swing trader. It is compulsory that you know the market environment. It's quite challenging for day trader and swing trader to trade during from the 1st to the 8th of each month, and from the 15th to the 20th of each month. So the market environment will determine the appropriate strategy that we will put in place. So if the market environment, the pilot, they want to fly, they check the weather. If the weather is too bad, the flight will be cancelled, yes or no. So the same thing we do as a traders. When we look at the market environment, it's too windy, it's too volatile, it's too much going on. Well, you have to keep your money in your bank or protect your firm if you are a professional trader. You don't want to be gambling with your firm money, okay? That won't be a good thing, all right? Your reputation may be online. So you will not trade very much. If you want to trade during the most challenging times, okay, you want to minimize the risk and maybe use 1 or 2 trades, and you are playing carefully with it, okay? So those are just few things you need to do if you want to trade FS successfully, okay? So on this chart, what is the trading setup that I'm looking at? So I have my trading setup. I know my trading setup, and I will be sharing with you one of my trading setups. The trading setup that we are seeing here is very simple. I've talked about it in another video today. In fact, I will refer you to a video that I call How to Combine Stochastic Patterns. All right, pay attention. How to combine stochastic pattern and double bottom chart pattern, part 1. How to combine stochastic pattern and double bottom chart pattern, part 1. That video, I have posted it at 24 Stock Trader YouTube channel. Digit 2, digit 4, Stock Trader YouTube channel. So YouTube said that video, how to combine stochastic pattern and double bottom chart pattern, part 1. And this is it. When the stochastic, I will not dwell on it. That's why I'm referring you to that video. When the stochastic 833, the setting is very important, must be 833. Okay, not the RSI. Okay, as a trader asked me, can we use the RSI? No. When the stochastic 833 form a double bottom chart pattern like this, all right, is highlighting to us a support level. So you can see, I don't want to dwell on it. I will just go to it. I will refer you to that video already. That support level here is 15003. That's the red line here. So stochastic form a double bottom chart pattern is highlighting this support level, not this one here, but this one here at 15003. We draw that support level, and if a financial instrument, if the stochastic form a double bottom chart pattern, and we highlight that support level, if the price goes above that support level and come back and retest it as it's doing here, you see here, it's retesting the 15003. Am I talking to myself? Let's zoom into it. All right. Can you see it? You can see now. I zoom into it big time. All right. Can you see on the chart that level? Here it is, 15003. Stochastic has formed a double bottom chart pattern. That support level is 15003, and the price is now retesting it right here on the monthly chart. When I look at this chart, I know straight away that I have a high probability trading setup. I can see also that here we have a triangle that is in place. The price is below, a little bit below the triangle, but we have a high probability bullish trading setup. So now the next step, as a swing trader, it is compulsory that you implement a top-down trading method. So because the trading setup is on a monthly chart, we will quickly look at the quarterly chart, which I already done, and then we'll go to the daily chart. So on a daily chart, we are looking for a clear-cut signal. I will not dwell on this one either. All I will say, I will refer you to that video that we call top-down trading method or multiple time frame trading method by 24 Stock Trader YouTube channel. YouTube search that video, top-down trading method by 24 Stock Trader or multiple time frame trading method by 24 Stock Trader YouTube channel. And you will see that video, okay? So on a daily chart, if I start doing a few things on the daily chart for you, you can see I'm going to draw a trend line because we are waiting for a signal. In my view, the signal has already taken place. Here it is. If you pay attention to this line here, that a trend line that I'm drawing on my daily chart. So from the monthly chart, I'm now on the daily chart. This is about a top-down trading method. You see here, this trend line that is covering the price. Connecting this point. Here, this point on the daily chart. And then this, oops, I move a line. All right, okay, now, and this one here. So I have a bearish pink line. So you can see that the price gently breaks above that pink line and retests it here. There is a small doji here. A doji and a bullish candlestick bar. Okay, so and the stochastic was also oversold at the retest point. This is my signal here. It breaks below that bearish trend line and retest it here. That's my signal. Now, in order to enter the trade, I must go to the hourly time frame. So you see my pink trend line again on the hourly time frame is right here. Probably you have missed the opportunity to enter the trade in the vicinity of this pink trend line on the daily chart. Okay, as we see on the daily chart, we come to the hourly time frame. You can see what the price has done here. This is beautiful. Look at that. You want to enter a bullish trade, you can look for bullish chart pattern in the vicinity of the support level. You see here, forming all this bottom along the pink line. Monthly chart, daily chart, hourly time frame. Boom, here it is. So with a bit of hesitation here, if this is too messy for you, okay, because of this trend line now on the hourly time frame, here it is, another opportunity to buy right here. So, all right. As I explained to trader before, we can zoom into it. So if you're having difficulty to enter a swing trade, if you don't want to enter directly on the hourly time frame, you can drop it down even to the 10-minute time frame, even to the 3-minute time frame. All right. But don't just buy for no reason. Look for bullish chart pattern, look for a trend line to be broken and to be retested, look for higher low for bullish, if you want to enter a bullish trend, higher low, something like that. Now, suppose it's now that you look at this trend, you say, oh, John, so how am I going to enter it now? It's too late for me. What am I going to do? All right, you are panicking. Okay, Very simple. Stay calm, all right? Your entry time frame, the signal has been fired. Now you want to know, so you missed the first entry point, blah, blah, blah. Now you want to see whether there will be another opportunity for you to enter the trade. So what you need to do is to start drawing lines on the hourly time frame. So suppose you were here now, and you missed the first boat, well, or you missed the first entry time frame. That's not a big issue. Just relax. Good things come to those who wait. So we have this trend line here on the hourly time frame. Can you see it? It's looking bullish, yes or no? So there was this low here, followed by those higher low on the edge of the pink line, and this one here. So if I miss that opportunity, I may be entering the trade. You see, there's also this kind of channel here, a declining channel here. On the hourly time frame, the price breaks above it and now form a higher low here. Now, if you miss that opportunity and you are a very conservative trader, you will be praying or expecting or hoping that the price, if only it can pull back to retest this orange trend line and give you the first bullish candlestick bar, that will be another entry point, yes or no? Or you may use the most neglected technical tool, the pitchfork tool. You see, 3 points that we need to use, a pitchfork tool. First point, second point, third point. You apply the pitchfork tool to the price action. This can also help us to determine where is the best place to enter the trade. So now that I place the pitchfork tool on my hourly time frame, where are the best place to enter the trade? There's one here on the edge of the pitchfork tool. But there's one more thing that we can do is to draw a media line for the second part of the pitchfork tool. By the way, if you want to learn more about the pitchfork tool trading, go to www.dayprotraders.com or go to Day Pro Traders YouTube channel and watch every video or watch the playlist of pitchfork tools. All right, so we divide the second half of the pitchfork tool into two. And if the price could not go all the way to the orange line, but if it did pull back gently near this line that is dividing the second half of the pitchfork tool into two, that will be another place. So if you pull back to this point and change the direction, that will be another place for our entry. If you don't want to rush, we can wait patiently until we see a new higher low on the hourly time frame. As I explained to you, from the hourly time frame, you can drop it down to the 10-minute time frame, even to the 5-minute time frame, to look for a best entry point. It makes sense? It is also a powerful. This is about the key, to a successful FX swing trading. But this is not all. So you may say to me, Joy, what's more? All right, the good news is that this is about a technical analysis, So you have done your homework, you find your value trading setup on the monthly chart, you validate that trading setup, you see a clear-cut signal on the daily chart, you go to the hourly time frame and you want to enter the trade. You check the market environment and you don't want to violate the trading triangle. What is the trading triangle? The trading triangle is just about, paying attention to the economy news and the fundamentals. So it's not all about technical analysis alone, it's about, combining the technical analysis with the fundamental. So as a forex trader, the key to a successful FX swing trading is to follow first the trading drill, which is a technical analysis. But the next step is to check the economy news at www.forexfactory.com. Go to forexfactory.com, click on calendar. You will see a list of the economy news that I do. You want to pay attention to the red envelopes. The red envelopes is highlighting to us that the red envelope is highlighting high impact economy news. Those economy news, we want to know when they are due. All right. So we do not place a trade before those economy news are released. Or we may see economy news that are relating to the financial instrument that we are about to trade. In this case, we are talking about currency. We can apply the same strategy for stock, for futures, for commodities. All right. So the economy news are essential. So if you are a stock trader, you are watching this video, it's great. you will pay attention to, okay, the news relating to the stock that you are about to trade, all right? And you want to check the balance sheet of the stock that you are about to trade and perform a Google Assist test. But for a forex trader, the next step is to check the economy news at forexfactory.com, see whether there are economy news that may affect, okay, your swing trading. I do not want the video to be too long because we have been recording videos before. All I will say to you, be busy, okay, as traders have already been doing, watching our video. I would like to say to you, thank you very much. Watch videos, okay, our videos, and because I've already mentioned few things before, but this is the key to a successful swing trading. To summarize this video, it is essential for a swing trader to know and to understand and to master a specific or many high probability trading setup. Once we have our trading setup, we will now validate those trading setup on a higher time frame. It is essential as a swing trader to implement a multiple time frame trading method. The trading setup does not guarantee, okay, a winning trade, but the next step, which is how we control the risk, by how we implement a top-down trading method, how we combine the technical analysis and fundamental, this will allow us to achieve a winning trade. So high probability trading setup, there is one here, prior retesting, okay, a support level that the double bottom stochastic pattern is highlighting to us, okay. There's one here. So I leave this one for you. It's a bullish trading setup. It's a high probability trading setup. Let me know how you get on with it. As always, if you are new to swing trading or you watch this video for the first time, try to use a demo account. Practice. No rush, my friend. Keep your money in your bank. No rush at all. All right. Work on your ability to trade. Gain some experience at least. All right. Build some muscle, so to speak. All right. And when you are ready, you will know. And then you start going live, okay? We wish you the very best in your trading. And until the next time, enjoy yourself and be very happy. We are the TSTWSYS008 traders talking about the key to a successful swing trading. If you want to purchase the 24SP trading material, the trading material that revealed to traders 13 essential stochastic pattern, go to www.stochastic-magdi.com and click on the web store. If you want to become a TSTWSYS008 trader, also go to the web store at stochastic-magdi.com and purchase the TSTWSYS008 trading system, a trading system for swing traders. Happy swing trading to you all, and I will speak to you very soon.